Now, I made a video a while back talking about the fact that the JP Morgan Equity Premium Income ETF, or JEPI's dividend distributions just keep on getting smaller and smaller over time. And the fact that this could be a significant problem when it comes to JEPI, because a lot of us income-focused investors that invest into JEPI originally, which keep in mind the ETF used to offer north of a 7, 8, 9, 10% yield, now we're earning just around 6% per year as far as a dividend yield goes, which is not necessarily enough income to justify holding on to a income-focused ETF that basically more or less trade sideways. Now in this video, we're going to talk about JEPI's most recent dividend payouts, which is the smallest payout we've seen in several years. I'm going to explain to you guys exactly why this payout is getting so small and exactly how this ETF works. Then towards the end of the video, I'm going to share with you exactly my plan when it comes to my well over 1,000 shares of JEPI that I've held for years now. So if you own this ETF or have ever thought about it, make sure to stick around, drop a like down below because we have a lot to go over. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to go over some of the basics so we are all on the same page here, JEPI, of course, is a more income-focused ETF. It says it right in the name, and the objective is to seek consistent premium income with lower volatility. And that definitely was the case, especially when this ETF first started trading years ago. Like I said, this ETF was paying massive dividends on a monthly basis to investors like myself, which justified the fact that this ETF is probably more or less going to trade sideways because of the cover call overlay. But it says right here on the website, JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. And although it has done that, over time we've seen smaller and smaller payouts, which is concerning, especially for investors like myself that want to use their portfolio in the future to live off of. We need to have a consistent amount of income, not a drop in amount of income, if we ever have a hope or a dream of living completely off dividends in the future. Now, the portfolio says this: defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on a proprietary risk-adjusted stock rankings. And here's the important part: disciplined option overlay implements a written out of the money S&P 500 index call options that seek to generate distributable monthly income. Now, this is going to be the part to listen carefully to, because JEPI does sell cover calls and because option premiums are going to change around month after month, meaning that sometimes option premiums could be very pricey or sometimes they could be very cheap. Because JEPI sells out of the money cover calls, this is going to determine largely the fact on if or if not we're going to see a large dividend payout during that given month. Now, this right here is the volatility index, and generally speaking, when the VIX spikes up, option premiums are going to be more expensive. Now, as we can see over the last 6 months or so, there has been very few times where the VIX has gotten expensive. Actually, just as I film this video right now, the VIX has shot up to a recent 6-month high, actually a 1-year high at that, which means that option premiums are likely going to get much more pricey. When volatility enters the market, premiums shoot up with it for the most part, which means ETFs like JEPI are going to be able to potentially offer a lot more dividend income to investors during these time frames. Now, because as of recently over the last month or so, the VIX was very cheap, that is largely going to be a reason on why JEPI's offered such small dividends over the last month or so. Now, moving forward, if the volatility index stays spiked up like it is right now, we could see a bigger payout in the next 30 days, but again, that all depends. So because of the strategy that JEPI and other cover call style ETFs employ, you're really going to have to hope that there's some volatility in the market if, of course, you want to see your dividends, if, of course, you want to see those distributions become more and more juicy. Now, looking at the last 12 months of dividends that JEPI has paid. Back in September of last year, we saw 33 cents. We saw 36 cents back in August. Then the biggest payout of the last 12 months was 42, almost 43 cents, which was pretty big considering JEPI has barely crossed over the 35-cent point over the last year or so. But just as of recently, the 28.9-cent dividend that we're receiving on August 5th, this is not only the smallest payout that we've seen over the last year, but this is the smallest dividend payout that JEPI has given investors in over 2 years. Or to be even more specific, as you can see right here, the most recent 29-cent dividend that we're going to receive in a few days here, it has been a long time, all the way back to 2021, where JEPI paid 26 cents to investors, it's been since 2021, which is several years now, to where we've seen this low of a payouts, which has a lot of investors, including myself, very upset and really has us thinking, is there better covered call style? Is there better income focused ETFs out there that are going to pay a bigger distribution because of the strategy that they employ? And or overall, is there better options out there for our money? Not to mention, like I said towards the beginning of this video, and probably like a lot of us know, because of JEPI's strategy, this ETF more or less has traded sideways over time. On the 1 year, JEPI is basically flat, and year to date, the ETF is up 2%. Now, I know there's some covered call income style ETFs that actually decay like crazy, so I'm not necessarily saying JEPI is worse than them, but I am saying on the max time frame, going all the way back to 2020. This ETF is up 12% as far as price return goes, and again, because of the nature of this ETF, that's not necessarily horrible. I'm not complaining about that because again, I was paid a decent dividend the entire way of holding on to JEPI, but still a 12% return with a falling dividend payout. That's not necessarily something to be super excited about. But still, it's only fair to give JEPI their flowers where it's deserved, with a $10,000 investment into JEPI back around 4.2 years ago, and dividends reinvested along the way. That investment would have turned into around $16,000 or so, or an average annual total return of 12.4%, a total return of 63%. So you have to admit that even though JEPI's dividends have been getting smaller, and even though this ETF has been pretty much trading sideways, the ETF still has held up over time, which is something positive, obviously. And of course, part of the reason on why, as of this moment, I still personally hold well over 1,000 shares. Now, even with the dividends being spent along the way, let's say you want to live off the dividend income along the way, you still would have had around a 10.9% average annual total return, which again is not horrible whatsoever. Now, to be completely transparent, I, along with a lot of investors I'm seeing around the community, trimmed their JEPI position as of recent and bought into SPYI, the NEO's S&P 500 high income ETF. Now, this ETF, although it offers a similar strategy to JEPI, there are some big differences, which I think could potentially offer a better total return when it comes to a long time frame comparing both SPYI and JEPI. Now, SPYI is basically also traded sideways more or less on the max time frame. Since 2022, it's flat as far as price return goes, but over time, this ETF, unlike JEPI, has been paying 50 cents more or less every single month consistently to investors, which is a massive yield, around 12 to 13% to be exact. Now, this ETF is relatively new, so only time will tell on how this ETF actually trades during downturns, but because of this ETF's cover call overlay and the general strategy that it employs, I think this ETF is going to hold up pretty well, even if we see a prolonged downturn coming up. Which brings us right into my last point, my plan with my 1,200 plus shares of JEPI that I currently hold as of right now, and that I've been holding for quite some time. Like I said a second ago, did just as of recently trim my JEPI position, just a few shares here and there, nothing big, nothing major. But I am moving some money from JEPI into SPYI just to see how that plays out long term. Now, on top of that, because I am up on my JEPI position still, even with the most recent dip, I'm selling some cover calls and getting paid some extra premium and willing to sell my JEPI shares for a certain price in the future. And this is simply because of the things I stated. JEPI over time has basically traded sideways, paid a smaller and smaller dividend over time, which again is probably going to stay pretty low. Of course, unless there's massive volatility that's going to be coming in the market sometime soon here. But all in all, we have to be real here, with JEPI's total return still being around 11-12% as far as dividends plus price return included. JEPI has not been a horrible investment by any means. As much as we want to rag on JEPI, a lot of people do rag on it. And as much as we want to complain about the smaller dividend payouts, trust me, I'm the first one to do so, JEPI has still been an overall good investment for investors over the long term. But now lastly, most importantly, I want to hear from you guys down below when it comes to JEPI, the most recent smaller payouts, and if not, you're going to hold on to this one long term. Are you currently buying, selling, or holding JEPI? As of right now, let us know down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.